Hey everyone, welcome back to CryptoCache. Thanks again for joining me here. Taking a quick look here again at Matic, we're double checking a couple of key factors here. We're gonna look at some liquidation levels too, of course, but just generally understand best practice and big picture for, with situations like this. We got this rising wedge pattern here, just wanna be mindful of that. That's generally construed as a bearish type of breakout where the price action works itself in and inevitably breaks down because it cannot break through this resistance level. So keep in mind that that's a common characteristic for this kind of pattern. Do patterns, repeat themselves? Yes. Are they 100% guaranteed? No. So let's take a quick look here at the back end and see what's going on. 58 cents is a pretty solid consideration for a liquidation level. In other words, we have 57.75, roughly 58 cents as that heavy concentration of liquidation. So keep in mind, there is definitely more incentive for the price to go up than down, just based on the natural greed of market movers. They're going to push the price to that level, squeeze out a bunch of those shorts, and then potentially even reverse the price action from there. Or it could continue to go up to this 59-cent mark too, right? Again, this is not a guarantee, but this is a larger statistical probability the price goes up because of that. So we got some conflicting stuff here, right? Okay, keep that in the forefront of your mind. If you want to become a better trader, CryptoCache.tech is the site. Link down below, just quick heads up there. We've got a Trading Academy community and signals group. Quick congrats to our community members here. Nice profits there from Cardano, Solana, and Cardano, Link, Solana. These are just my day trades from last night and this morning. And then of course here we got some nice swing trades from Ethereum, Caspa 33%, and Bitcoin 68%. Oh, that was a short previously. There we go, 30% Bitcoin long from 59,000 to 62,000. Okay, let's go ahead and jump into the daily time frame and see where we're at as we'll work our way down. And we got to recognize too, just to quickly clarify, there's a pretty massive, descending trend here. Again, this is not exact science, but being up over that descending trend line will be very helpful. We want to be over the 20-day SMA at the very least, okay? So that's kind of what this line is for here. It's just kind of letting us know that's an area of potential resistance. So, if we do break free of 58 cents, move towards 59, we're going to see some resistance there with that 20-day SMA, but also the descending trend that typically will align itself with the 50-day SMA. And it's an inevitability where the price action will start to come down here, and we'll see if we get there what that looks like for resistance. Anyways, we want to presume it will work as a resistance until it doesn't, okay? That's generally how they work. I know it seems contradictory, but I'll explain more in time. What I want to talk about here, though, is that we have a good stochastic convergence here. RSI is slowly rising, and MACD is converging. So we've got good momentum, if you will. But by no means is this like a phenomenal situation. When you look at the daily time frame, all these candles are pretty ugly, okay? And they're slowly getting better, but we're still looking at a doji candle potentially here today. There's a lot of reasons why we cannot just presume the price is going to go up. However, if you do look at the overall price action here on the 4-hour, we're above the 50 and the 20-day SMA. That's generally a very favorable sign. Not a lot of coins are doing that here today, and that's always a positive. We look at the RSI too, we're maintaining above 50. That's extremely beneficial. Breaking below that could cause a continuation of the downside. Money flow index is increasing, telling us the last 2.5 to 3 trading days, the price action is looking pretty good. Okay, so again, we're seeing more volume flowing into this coin at this lower price point, generally favorable. While it's not monumental volume, it's a lot more than it was previous when the price action was going range bound and or down. Okay, so again, good volume, more volume than previous, but not like phenomenal either, right? So we can't just like jump for joy for that. But I would say being above 50 on the RSI and stochastic RSI converging for the second time, those are some positive contributing factors here. Looking at the hourly, we double check this here, we can see that we are soon to have the lagging span intersect with the price action. That's generally a sign you want to secure profits if you're in profit, okay? We can see the conversion line and baseline are intersecting as well, implying that we might see a shift of momentum, but we're still above the cloud. So generally, to me, being above the cloud is probably the most important. That's a good support, but we're right there at that point of control here. In fact, we take a look at our TPO, we can kind of verify and see that we're working within that same volume profile for the day. So a closure today at 56.6 or higher would be advantageous. So the bulls have controlled that 24-hour period and the more likelihood of the price going higher from there. Granted, I get the question a lot, what's the point of control? How beneficial is it? Well, it lets us know who's controlling the price action in that day. So the price is above it for that 24-hour period, then you can generally understand the price is more likely to go up than down. Inverse applies as well. So if we close at 56.5 or lower, we'd be below that point of control, losing that, showing the bears took control on that time frame, and the price action is more likely to decrease. So it's all the more important or prudent for us to be able to have the price action close where it's at or higher, because if we close below that TPO, we could very well see a bearish backtest of this this trend line here and essentially see the price action pull back because of that rising wedge pattern. So that's a lot of the reasons why rising wedge patterns do break down, is because they cannot maintain that volume at that resistance, and they inevitably just bleed out because they don't have enough volume to get through a resistance level, basically, which is what we're seeing here. So again, all these things together, somewhat of a conflicting case scenario. This does not give me any confidence wanting to take a long or a short. We are in profit for our long right now, so if you're concerned about it, folks, adjust your stop loss to break even or higher, maybe secure some profit, adjust to break even so you walk away in the green. Okay. Again, there's a handful of things you could do, but Matic does look decent in the overall sense here. And the main reason why we took some trades is just because there's a significant amount of support down at this 53, 54 cent range. The likelihood of breaking down below 54 cents is very, very low. So that's why it's a low risk trade for us. Either way, I appreciate y'all watching. Do me a favor, hit the like button if you haven't already. Comment below, join us on Twitter, Telegram, Discord. We also have TikTok and YouTube Shorts now, so a lot of fun there. Check it out. I appreciate y'all, though. Thanks again so much for watching. We'll see you in the next one. Take care.